Not much. What's going on, everyone? Vega here for Serpent X Tech. Welcome back for another episode, weekly live stream of Caffeine and Crypto, where I welcome you to join me. Is your favorite caffeinated beverage, morning beverage, whatever you got, as we go over some cryptocurrency news. Nothing much too popping, but I do got quite a few articles to go through, so I'm going to go ahead and start rocking and rolling. I will say that first off, thank you to everybody who likes and subscribes to this channel, and if you're new. I cover a lot of crypto mining related content, but I really am like a tech person, period. I just enjoy crypto that I make content on it. However, we do other stuff as well. So if you're new to the channel, I would encourage you to just go look around, maybe go to the search section and just type in some words and see if any of the content that I do create pertains to you or something that you might find useful or helpful. Because that's the whole point of the channel, is to help users out there, whether it's crypto related, tech related, and believe it or not, I have some automotive videos that actually did pretty good on specific issues or occurrences. Either way, on today's live stream, talking about the market, right? So the market is meh, right? We're not really seeing too much going on since the Bitcoin halving had taken place. Mining profitability has diminished quite significantly, GPU mining especially, as we're continuing to see more and more of, I would say, these undercover FPGAs / ASICs, whatever you want to call it. Now, there was some communications I had with a colleague in the space, Red Panda, about what we've been seeing. And we're going to talk more about that later in the stream, so you're just going to have to stay tuned. But either way, the market is meh, profitability is meh, and when are we going to see an uptick? Well, usually after a halving, it's going to take 3 to 6 months. It's going to take probably towards the end of this year for us to start marching upwards, but that could happen sooner than anticipated. Everything is happening sooner than anticipated because it's a whole different ballgame. Like as far as other Bitcoin halvings and the trend or the cycle, this is the time space has been moved up. What normally happens over here is happening over here, right? The ETFs, all that stuff. Caused us to go up to a new all-time high before the halving, when that should have really taken place after the halving. Right now, we're sitting around that 63K area. You can see it's been kind of a red week this week. When did we start this week? What is the beginning date? The 22nd, right? So the 22nd, you can see we had a green candle. We started marching from around that 64.5 range. We marched up to the 67.2. And then that was just Monday, right? So maybe there was we came back from the weekend, right? We were having a green week last week, or towards the tail end of last week into the weekend. We were having a green week and weekend. Monday saw some more excitement, but then after that, we just started to go down with only one green candle on Thursday. So there's a reason for that, and it's going to do with the ETFs not getting as hyped up. It's more hype anything than actual inflows, and there's actually some outflows that we're going to talk about, but also that maybe some mining operations did take profits, right, to reallocate, to readjust, to reprovision, whatever it might be. Maybe some mining operations did take profits, but you can see that the volume, if we look down here at the bottom, is nowhere near our march up to the new all-time high. Like we're basically less than half of what we were doing back here. So when that volume starts to come in, institutional players continue to invest heavily, and then retail investors all are jumping in at the same time, is when we can start seeing that new march to a new all-time high. Don't forget, though, something I do not have on today's show is the Hong Kong ETF that's coming in the future. I believe that's April 30th. That should bring new inflows. So hang tight, stack them sats, don't get discouraged. We will be fine. It's not the end of the world, and keep grinding. So first article we have here is Bitcoin chops around the 64K range with Japanese yen tumble, maybe signaling currency turmoil, says analysts. And what I noticed too in like when you do a quick review of your Cash App, right? You got stocks, and there's certain stocks, and primarily in the tech stocks that are in the S&P 500, and then your Bitcoin portfolio. And I did see that compared to Bitcoin, the traditional stocks were climbing up. You know, could we have a recession, as people have been calling for many months now, towards the end of this year, beginning of next year, that could, one of two things, either bring crypto down with it or cause people to flock away from their positions in the traditional finance to Bitcoin and various cryptocurrencies. We have to see. The yen's volatile episode may spread to other fiat currencies as U.S. rate cuts remain elusive and sticky inflation, which could drive investors to gold and Bitcoin. The Japanese yen fell Friday to its weakest level since the U.S. dollar, against the U.S. dollar since 1990. Bitcoin remained flat around the 64K range, and some altcoins slid lower. Intervention may follow soon if yen devaluation continues, says Lecker Capital Quinn Thompson. Talks about cryptocurrencies, widely known for their volatile nature, were a sea of calm Friday, but the Japanese yen tumbled to a fresh 34-year low against the U.S. dollar. Traditional market observers mulling over the potential knock-on effects. Because usually, now we had in the past, if you look at the traditional finance, where there was a collapse of the Japanese economy that did affect the U.S., but not every single time. If there was such a collapse in the Japanese economy, it didn't always affect the U.S. And so some investors in the U.S. are not really concerned, but some of them are concerned because sometimes there's a domino effect. Just like if the U.S. were to collapse, now that's going to have a knock-on effect in the EU, in the Japanese yen, probably in the Chinese market as well, so on and so forth. But if Japan goes down, it might have a small effect or a major effect. They're not correlated because it hasn't happened every single time. Every single time the Japanese economy has crashed or had a significant downturn, it did not always affect the U.S. market. I forgot where you could go look, but you could go look up this data. Bitcoin continued to its recent choppy action during the day within the tight range of 64K, down around 0.9% in the last 24 hours. The broad market CoinDesk 20 index, or CD20, excuse me, fell slightly more than smart contract network token Solana, ICP, and Uniswap, declining 2% and 4% respectively. The Japanese yen dove another 1.3 during the day, a huge move for the major currency to its weakest level against the U.S. dollar since the 1990, after the Bank of Japan, or the BOJ, held interest rates at near zero and didn't indicate much concern over the weakening currency. In the U.S., meanwhile, continuing solid economic growth and stubbornly high inflation are snuffing out hopes for perhaps an easing of monetary policy this year. So with the FOMC coming up, you know, people, I don't know where it is that they bet on this, but I think people are betting that there's going to be a rate cut. But I believe Jerome Powell did say that we may continue to pause. And if we continue to pause, you know, still stagnant in my eyes, if we do a rate cut, that's when the markets, including crypto, could start marching upwards towards a newer level. We'll see. We'll have to see. But don't forget, this 63K arena, that's why this purple line is here. This 63K arena is a legacy line, right? So this is one of our previous all-time highs, and we're sitting there. So it's either support or it's resistance, depending on where we fall. We're kind of like in limbo right now. We're not, like, if you look at the line, the candle's like in the middle. We are above it, but the candle's like in the middle of it. So, you know, I would say after this weekend, because we have fallen below it multiple times, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. If we count 11 just from March to now, because there is a couple times here where you could see it turn support, right? Like we just basically, we wicked below it, but we basically bounced off of it and came back up. If we fall below it and sustain below it for much of this following week, then it's going to be resistance, and it's going to be hard to break that resistance unless new net inflows and so on and so forth. So something drastic's got to happen. Anyways, the yen's devaluation didn't impact cryptocurrency markets, but this could change if the BOJ steps in to prop up the currency. Analyst and the author of Crypto is Marco now reports, Noel Ashen, sorry if I mispronounced your name, said in an email interview, a possible intervention could mean that the BOJ is selling U.S. dollar assets to buy yen, and a weaker greenback could in theory, help crypto prices, she added. Another form of intervention could arrive from the U.S. policymakers deciding to inject liquidity to markets, which could support risk assets such as cryptos. And then we got a quote here where they say we could see a collective selling of U.S. treasuries to raise cash to support local currencies, adding further upside pressure to U.S. yields while adding to inflation pressures elsewhere. This currency volatility and vulnerability could encourage more corporate and even sovereign holdings of hedges such as gold and Bitcoin. So I think the catalyst is, continued ETF inflows and a flocking of the retail, the mid space, the big guys, the suits to cryptocurrency or gold because of lack of trust in the economy. And there is a lot of lack of trust in the economy, as much as the government wants to act like, no, everything's fine. Now this I'm not going to pay for. US Bitcoin ETF suffered one of their worst outflows in digital token waivers. Fidelity Fund has its first net outflow once since listing. Reducing scope of Fed rate cuts is sapping risk appetite. Investors pulled over $218 million from the U.S. Bitcoin exchange traded funds, or ETF, one of the worst daily outflows as demand for risky investments take a knock from the fading hopes of the FOMC interest rate cuts, basically, okay? So, and they talk about it again. Bitcoin ETF stalled. BlackRock ends 71-day streak. Fidelity sees outflows. So we got outflows and we got streaks being broken. It's not, the hype train has wore off. People have concerns. And you can see even gold. If we look over here, let's go to gold real quick. Has dipped a little bit, right? So the 26, which was yesterday. I'll check live chat here in a minute. If you're trying to get my attention, either at me or send a super chat, please. Obviously over the 5-day, it's technically up from when it started. If we look at the 3 months, way up. 6 months, gold was making new all-time highs, where it hit that 23.95, almost 2,400. So yeah, it's way up. But as far as this week, or the end of this week, it did fall, right? Because yesterday was a little bit of a concerning day, I guess you could say. Anyways, back to here. We'll read this article. Let me check live chat real quick. Say good morning to everybody. For all my future viewers, just hang tight. All right. So I'm not sure if Crypto Mikhail and the team came over yet, but if you did, thank you. I missed it. What's up, Simon? Yes, I read your tweet. We do need to link up. Magic Lucky, thank you for being the first or last. You're always first in my heart. BG, what's going on? I've been mining for a year. Where's my Lambo? I know, man. I've been mining for many years. I still don't have a Lambo. I got a Subaru. That's about it. Robert, what's up? Crypto Pounder 4. Pellish, good morning. Tech Man. Wallets are not brokers. They're information protocol tools. This lawsuit is nonsense. Automatic Beats. Rud Puts. Crypto Pounder 4, what's going on? All right, sweet. So you guys hang tight. I'm going to keep on rocking through the news. We have, this week, the most significant exchange or ETF launches in history showed signs of abating interest on Wednesday and Thursday. BlackRock spot Bitcoin ETF, IBIT, which has been winning the Cointucky Derby, as they call it, right? Kentucky Derby, Cointucky, never mind. Anyways, by a margin, saw zero inflows according to the CoinGlass data. This ended its 71-day streak of fresh investment, which totaled around $17.24 billion in assets under management since the product was approved for trading January 11th. Also on Thursday, Fidelity's FBTC, which, by the way, if you translate that as far as an acronym, it means BTC, if you read my lips. But anyways, Fidelity BTC, the current runner-up in the ETF race, reported losses of $22.6 million in its first reported outflow, taking its asset under management to around $9.9 billion, according to CoinGlass data. The easing interest in the two leading Bitcoin ETFs, excluding Grayscale, is a key indicator of the cryptocurrency market cooling over the last month, and a suggestion that the initial ETF frenzy has caused Bitcoin to skyrocket, which it is. It did. It most certainly did. Currently trading around 63.5, which now is 63.1 or 2 at time of recording or live streaming. Bitcoin has dropped approximately 12%. It says its all-time high is 73K in March, which is a little bit above 73K, but rounding up or rounding down. On Thursday, Only one of the 10 trading spot Bitcoin ETFs, Franklin Templeton EZBC, reported inflows. And you can see here a chart where IBIT's obviously still in the lead, but FBTC is second. And where is GBTC? Oh, they excluded it from this list. Okay. Disappointing inflation data has slashed hopes for the FOMC to cut interest rates, and higher for longer borrowing costs typically dampen the market's appetite for riskier, more volatile investments in crypto, right? So the halving happened. People hyped it up. You know, ETFs came out. It was hyped up. Buy. Get close to 74K. Then chop sideways. Now draw down. And here we are. The appetite, the hype has worn off. So now, are we going to get a shakeout? I believe so. I believe as we go through the next couple months, we're going to have a shakeout. The weaker hands are going to capitulate and let go of their holdings, while you and I will continue to accumulate by various means, whether it's through dollar cost average or investing, heavily, whatever. But we're going to grab as much Bitcoin because you and I might believe, unlike so many others, that Bitcoin is here for the long run. And while many people are going on various news outlets and mainstream media to say and call for a $120,000 Bitcoin, $150,000 Bitcoin, $1 million Bitcoin, I am not a pessimistic, but I am optimistic in Bitcoin's long-term viability. I do not think Bitcoin would hit $1 million by 2028, but if they want to believe that, that's fine. However, I do agree with the math for at least a 2x, which will be around 140,000, or anywhere between 125 and 150, which is what I said many of times on the live stream. But again, I expected all this later. I expected us to march to a new all-time high later. I expected us to get start running up, as we lead into the presidential election here in the United States, and as we get some type of like a good sign from the FOMC or the Fed, that we start marching up. But the ETFs just advanced that timeline and threw my numbers all off. And so I'm having to just look at the trends, study, and try to figure out where I want to get in. Now, timing the market, time in the market beats timing the market. I'm never going to time the ups and downs. Although, I will say, do I have it on here somewhere? Something that we're going to talk about is Alphium. Okay? LPH. Because look at that. Hang on, let me get a close-up of my face. Okay? Yeah. We'll talk why this is happening, and I do want somebody from the Alphium team, if you're watching this, to freaking come on the channel, please. We need to talk. I probably need to get into your Discord. I'll probably send an email or something, but, like, we need to catch up, yo. Like, for real. So, yeah. Nothing you can do will change anything. All you can do is understand your convictions, understand the cryptocurrencies that you believe will be here for the long run, and stack them sats, stack that GUI, stack that whatever the token name is for each individual digit or number, right? So the hype's over, the halving's done, we're moving sideways. Will we fall further? Yeah, I think we could fall to the 58, maybe 60K again, and later on over the next 2 to 3 months, then start marching upwards towards a new all-time high. But again, I was wrong because I thought we were going to do the all-time high 2 to 3 months from now, not 2 months or 2 months from currently time of streaming. Anyways, disappointing inflation, blah 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 blah. Basically people don't have the appetite for riskier assets or volatile assets. Meanwhile, Bitcoin has treaded water since March, partially reflecting ETF stagnation, but also a run-up in the networks called halving that occurred on the 19th. The buy the rumor, sell the news, exactly what I called it, but I'm sure many of us already called that as well because we could see it. Everybody was hyping it up before the halving. ETFs were hyping it up before the halving. The halving took place, and now everybody's like, the party's over. And you guys left all the trash around my house that I got to clean up. Jackasses. Anyways, It's typical to see ETF outflows or flows follow the performance of the underlying asset. So a pause in Bitcoin's price is likely resulting in a shorter term hiatus in inflows, says Nate, president of ETF Store, told Fortune. Many large institutions have yet to even allow their brokers to solicit purchases of the spot Bitcoin ETFs, and registered investment advisors are still slowly wading into this category. The bottom line is that the flows in an ETF category aren't going to go up in a straight line. They'll ebb and flow over time. I agree with that. Now, we got the Hong Kong ETF coming up soon. We still have brokers and many others that have yet to get in to, I guess you could, let's just call it the Bitcoin institutional environment. So when those come, we should start to see a significant increase in Bitcoin's overall price. Now, they state here, last week, Hong Kong Securities and Futures Commission granted approval for 3 Bitcoin and Ethereum ETFs. Now, here's something funny. I think the way that things are going, I think we have an article here on it today, and we're probably going to live stream for more than an hour, guys. So just hang tight. Got a lot of stuff to go over. Smash that like button for me. But I think Hong Kong is going to approve an Ethereum ETF before we do. I strongly believe that. We have an article here. Well, let's hang on. Just hang tight. But yeah, we got the Hong Kong ETF, which will begin trading on Tuesday, with further countries expected to follow suit. Issuer Harvest is waiving a management fee for its funds, which some anticipate will trigger a fee war similar to the heated one in the U.S., where Grayscale announced a Bitcoin mini trust with ultra-low fees of 0.15% in a bid to capture some of the outflows from GBTC, which charges 1.5%, right? Because the fees on GBTC were so much higher, we had a lot of outflows into IBIT and whatever. And remember, when these people sell their positions, they can't just immediately pick it back up, right? Like you or I, we can't just sell our Bitcoin position on our centralized exchange or DeFi or whatever and immediately pick it back up when it hits a target number that we want to pick it up at. So they have to wait and then buy back. So we got Hong Kong on the horizon. I do believe the way that the U.S. is going, that Hong Kong might approve an Ethereum ETF before the U.S. Now, that could change and I could be wrong, but I'm just saying that Hong Kong is on a good trajectory while the U.S. is we're waiting on the Fed. We're waiting on that regulatory clarity from the SEC, from the CFTC. We're waiting to see what is going to happen in a number of different arenas, and these people are dragging their feet. All right, they're dragging their feet, and you know what's more important to them? Unfortunately, getting reelected. Not the people, not the individuals out here working to make this country better, like individually, right? Like taking their kids to school, going to work, or they don't have kids, going to work and making a difference in the world for their company, for the individuals around them, stuff like that. These people that are in office, a majority of them are just self-serving. They're just in there for themselves, and all they care about is getting reelected and maintaining their position. So they're not doing anything for the individuals that got them there in the first place. That's what needs to change, at least here in the United States. Huge disaster. Congress just introduced a game-changing bill that could blow up the Bitcoin price and crypto market. Let's see here. I just want the bill. Now as traders, blah, 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 blah. A pair of U.S. senators have introduced a new crypto bill in Congress designed to regulate dollar-pegged stablecoins and described as a huge disaster by one expert. Where's the bill? You got me to click this link and you don't even give me the damn bill? Okay, I was about to say. All right, so the 171-page U.S. stablecoin bill introduced last week by Senators Cynthia Lummis, Republican from Wyoming, and Christine Gilbert, a Democrat from New York, would create rules of the road for stablecoin issuers like Circle, Tether, and potentially trigger a round of mergers and acquisitions between issuers and banks, according to analyst and investment bank TD Cowen. The stablecoin market, led by Tether's USDC and Circle's USDC, has ballooned to a $160 billion market. And don't forget, XRP is trying to get into this. XRP is trying to get into the stablecoin space, right? So dollar peg stablecoins have emerged as a fast-growing way for people to both move money around the world, and to get access to offshore crypto exchanges that can't work directly with the banks. So on 4/24, which was 3 days ago, Loomis and Gilbert Stablecoin Act could accelerate a move on-chain payments and tokenization of assets, according to Andrew O'Neill, managing director of S&P Global Digital Asset Research Lab. Stablecoins could be a key pillar of financial markets blockchain adoption by serving as a digital currency for fully on-chain payments, which promise efficiency and enhanced security, settlement security, specifically through tokenization of financial assets and digital bond issuance. Last month, the world's largest asset manager, BlackRock, quietly revealed it's already begun the second stage in its plan for crypto-based revolution in the financial markets with its BlackRock USD Institutional Digital Liquidity Fund, or BUILD, but BUILD, like, you know, HODL. Never mind. Anyways, investment groups like BlackRock BUILD Fund provides a recent use case. The tokenization fund, which uses the Ethereum blockchain and invests in U.S. treasuries, has a liquidity pool denominated in USDC stablecoin, for which investors can redeem shared tokens via a smart contract instantaneously and 24/7. You don't have to wait for the bank to open. The bill would be symbolically significant for the crypto in general, as it would be the first constructive crypto legislation from Congress. The TD Cowen Washington Research Group, led by Jarrett Solberg, wrote in a note by the block, and here's a quote, "If this approach is adopted, we believe it could lead to mergers between banks and stablecoin issuers, as issuers would want the advantages of being a bank, and a bank looking to play a role in stablecoins will want the user base of the existing issuer." The bill also ban algorithmic stablecoins. It would ban algorithmic stablecoins, prevent the use of stablecoins for money laundering or other illicit proposes, and hand chattering and enforcement responsibility for federal and state agencies. Loomis called the new bill, which would create a mechanism for federal deposit insurance, or you know how your funds are FDIC insured up to a certain point. Here you go. So the bill, which would create a mechanism for the FDIC conservatorship and resolution if the stablecoin issuer becomes insolvent, the most comprehensive stablecoin bill to date. Passing this bipartisan solution is critical to maintain the U.S. dollar dominance and making certain the U.S. remains the world's leader in financial innovation. It protects consumers by mandating one-to-one reserves, prohibiting the algorithmic stablecoins, and requiring stablecoin issuers to comply with the U.S. anti-money laundering and sanction rules. However, some from the traditional world of finance and crypto space have criticized the bill. It will be a huge disaster when any of them are passed, says Hillary Allen, an associate professor from the American University of Washington College of Law, arguing stablecoins aren't robust enough to be a viable form of payment. So I kind of agree as far as probably a little bit premature. You know, USDT back in the day, if you weren't familiar, the audit is on yeti.uk, got in trouble, right? Because they were supposed to be backed one-to-one by the US dollar, but when they looked at the reserves, they were in fact not. They lied on many occasions. And USDC Circle is not, you know, it can't throw any rocks at USDT either because it's had its shortcomings. Not to mention the bank, one of the banks, I forgot the name of it, started with an S. One of the banks that USDC used, and that bank was shut down and taken over by the government, so they were able to get their funds out eventually. But yeah, like a little bit premature, probably needs a little bit more setting, right? The foundation needs to be set before we go into this bill. But this whole crackdown on money laundering, right? There is needs for clear guidance, clear rules, and clear regulations. Banks merging with these stablecoin issuers, whether it's Tether or Circle, would make that stablecoin, one, more secure, two, a little bit more peace of mind because our funds would be FDIC insured up to a certain point, right? And you're hoping, and most people are hoping, that the stablecoin or whatever cryptocurrency they're holding is not also being utilized by bad actors for malicious or nefarious activities. We can all hope that, but that's not always true. There's always, whatever currency it is, there's always going to be bad actors using that currency. It doesn't matter what it is. It's more commonly the US dollar or the Japanese yen, or excuse me, the JPY or the yen. So it doesn't really matter. There's always going to be bad actors that ruin it for everybody. DCT rules out collateral for Bitcoin-linked ETFs. So DCT stands for Depository Trust and Clearing Corporation, a financial service company that provides clearing and settlement services for financial markets, stated that it will not allocate any collateral to the ETFs with exposure to Bitcoin and cryptocurrencies and will not extend loans against them. DTCC announcement states that effective April 30th, 2024, the DCC will implement changes to collateralized values for specific securities during its annual line of credit facility renewal, potentially affecting position values in the collateral monitor. The notice released on April 26 means that the ETF, similar investment instruments with Bitcoin and other cryptocurrencies as underlying assets, will not be assigned any collateral value, resulting in a 100% reduction in their collateral value. Now, should you care about this? Not really. Like you and I, probably not. TradFi, maybe a little. But I don't think this is the biggest thing since sliced bread out there. Either way, it's something to be educated on and so on and so forth, right? I just wanted to mention out. Estimate 75% of new Bitcoin investments came from 10 spot Bitcoin ETFs. We already know about that. 218 billion. It just talks about the outflows and inflows all over again. All right, Satoshi's final words from Bitcoin. Final words from BTC creator Satoshi Nakamoto revealed. And I know a lot of people have been like buying sats and auctioning sats and inscriptions and all kinds of stuff. So let's see what we got here. Disclaimer: the opinions expressed. All right, so this is an opinion piece. 13 years ago, Bitcoin's anonymous creator Satoshi Nakamoto sent what is believed to be their final email, a message that has since become a piece of crypto folklore. Satoshi's disappearance in 2021 remains one of the most perplexing mysteries in the cryptocurrency world. The final email, dated April 26, 2021, so yesterday, was believed to have been sent by Satoshi Nakamoto to the fellow Bitcoin developer, marking the last known communication from the Bitcoin creator. And then here is the email. Satoshi Nakamoto basically began the email by expressing his wish to not be talked about as a mysterious shadowy figure, of course. In a historic communication with the subject alert key, Nakamoto signaled a wish to move on, adding, "I've moved on to other things and will probably be unbelievable, and leaving Bitcoin's destiny to the community and its developers," right? So leaving Bitcoin to us, because Bitcoin is for the people. Bitcoin is for the individual, the unbanked, the people that can't get to an ATM in order to pull out money, the people that have no way to exchange a means of currency for a service, a barter or whatever, right? You don't just trade eggs or chickens for a cow. Right? You got a currency here, but because you didn't have a bank, you would barter with whatever you had around you or at your household. Well, Bitcoin allows the opportunity for us to bank the unbanked, period. Right? Doesn't matter where I am in the world. With Starlink, as long as we have internet, with Starlink, I could go to the remotest place in the world, or I can. Matter of fact, is anybody in Africa? I want a picture of where you live. And I want to see how remote it is, right? I'm gonna Google Maps it and everything. I want to see how far away from a civilized town or small city or whatever you are, to see where the nearest bank is. And I want to send you some Bitcoin, but you got to prove you are in Africa. We're not going to do this on a public setting. I will talk about it in a public setting, but I'm not going to dox any information or anything like that. I just want to show how easy it is for me to send you some Bitcoin, but then you need to be able to spend it. Right, so you're going to need hopefully some form of internet, whether it's cell tower or Starlink or whatever. So let me know. Anybody in Africa that watches this channel, I thank you first off for watching, and let me know. Anyways, Satoshi says, "I wish you wouldn't keep talking about me as a mysterious shadowy figure, and yet the entire community still continues to be exactly that, or do exactly that. The press just turns that into a pirate currency angle, which is one of the reasons why he was concerned at the very beginning. Because at the time of Bitcoin and the rise of Bitcoin, we had Silk Road, we had Mt. Gox, we had piracy in the shorter sense of the word exploding, right? The Pirate Bay founders were their service being crashed or shut down. Founders were being arrested. Various torrent or piracy sites were being shut down or infiltrated by the NSA, the FBI, shutting them down. So when we portray Satoshi as this shadowy, mysterious person, it turns into that pirate angle, and it does. Like, he didn't create Bitcoin because he wanted to improve piracy, because he wanted to allow people to sell ecstasy to one another or deal in the sex trade or anything like that. No, he created this currency because the banks failed us, and he wanted to allow another option for the rest of the world. Anyways, they go on to maybe instead make it about the open source project and give more credit to the dev contributors. It helps motivate them. And I'm not sure if you follow me or not. When I see updates from various projects and entities, I am quick to applaud the team's efforts and praise even miners, like dev miner, like mining software. Like it's good. They're spending time working on these products to improve our mining profitability, to improve mining software, to improve XYZ or whatever it is, this project, that project. So yeah, definitely give your shout out to your devs. I moved on to other things and will probably be unbelievable. Here's the CA or C alert key and broadcast code in case you need it. You should probably give it to at least one or two other people. There are a few longtime users who are always around all the time. So again, talking to one of the devs, I'm sure that's going to be like etched or something like that email. If it's not already on the blockchain or etched in the blockchain, it will be. Wow, it's already 11:40 and I haven't even gone halfway through the articles. Thank you for hanging out with me. If you haven't smashed that like button, please do so already. Gold is looking like it will hit 3,000 in my opinion, says Pellish. Yeah, gold is looking pretty good. Certainly so. Looks like Rabid Mining is not going to go live. Hang on. Let's go look up real quick. Is anybody going live soon? Okay, the hobbyist miner is traveling to mining farms in Arkansas, so he's live right now. Let's see. Rabbit Mining. Is he going live at 12? No, he's going live. Yeah, he's going live at 1. Red Panda, I don't think he's going live. Yeah, he's not going live yet today. I think he's still on vacation, maybe. Anyways, let's continue rocking out. Republic First Bank closed by U.S. regulators. Crypto community reacts. All right, so the U.S. regulators have closed the Philadelphia-based Republic First Bank, marking the nation's first banking failure of 2024. It has sparked debate among the crypto community. Yada, yada, yada. Another bank just collapsed. Republic Bank First Bank, yeah, I think I'll stick to Bitcoin. CEO of Zesh says Republic First Bank failure is worth a look since bank failures are the best possible narrative we can get for crypto. How many more need to fail before people start to be their own bank? This just gives more ammunition to the Bitcoin bulls and some of the crypto experts. I do believe there's a place in our society for banks. It's just who those banks are run by, the failures of the suits of those banks who get bonuses instead of, giant bonuses instead of improving the overall ecosystem of their banking environment, the customer experience, making sure reserves are good, making sure the people are getting what's up. Let's get a higher annual percentage rate for our savings and stuff like that. I don't want to lock it up in a CD and not touch it for 6 months, a year, 2 years, whatever. I want a checking account and I want a savings account with a high APY. You're making a lot of money. Stop spending it on helicopters. Stop spending it on boats and women or men or whatever the hell you're doing, and put it back, give it back to the people who have banked with you in the first place, dude. But yeah, March 23rd, Federal Reserve announced the closure of Signature Bank. Is that the one? No, Silicon Valley Bank. That's the one that when it closed, USDC or Circles, some of Circles funds was in there. And so we're going to see we might see more and more of these bank failures, especially again as the Fed is considering continue to keep the rates where they are. It's going to be a pause, not a cut or a hike, just going to be stagnant. We'll have to see how things go, because right now, you know, with the increased rates and everything, banks are eating dirt because of where they loaned out at in various positions. There's more to that, but I'm not going to speak to it. Anyways, Tether seeks to boost peer-to-peer payment on Telegram by expanding dollar gold stablecoins to Ton Network. Now, Ton Network has been growing, and a lot of people have been talking about being on Ton because they mine Gram coin. So a lot of the mining community has talked about it because of Gram coin. I don't like Gram coin because the fee is 50%. That's a lot, right? And Telegram token mining has put a bad taste in my mouth. I can tell you that right now. It has put a really bad taste in my mouth, right? So now Ton has diminished over the past month. You could see it hit an all-time high of $7.63 back here. Was that the all-time high? Yeah, that was the new all-time high. And has since fallen to where we're at, $5.28. All right, obviously it's following the market, but a lot of analysts and a lot of crypto influencers have talked about Ton Network and how it's going to be a game changer and how it's going to, you know, like they're talking about it, gaming and all kinds of stuff. Well, here's another one. We got Tether looking towards Ton. Tether is said to it aims to boast USDT and XAUT tokens on Ton for peer-to-peer payments, targeting Telegram's 900 million user base. And that's true. A lot of people are on Telegram. I personally don't like Telegram, but I understand Telegram as a tool to market, to reach, to communicate with all walks of life. Tether, the company behind the $108 billion market cap USDT, said it's expanding a dollar pegged stablecoin and it's gold back, blah, 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 to the ton, yada, yada, yada. Tether's transparency page earlier today showed that there's 10 million worth of USDT authorization on the Ton blockchain, with 3 million being already issued. With the move, Tether aims to boost both the gold and the USDT borderless peer-to-peer payments among Telegram's 900 million users, according to the statement, during the token 2049, right? So it's token 2049 was the conference, or Dubai 2049. The expansion will also benefit the rapid growing Ton ecosystem, where users will be able to use stablecoins into DeFi applications. The launch of the USDT and XAUT on Ton will allow seamless value transfer, increasing activity and liquidity, while offering users a financial experience that can match those found in traditional finance systems, says the Tether CEO, Paulo Ardino. This furthers our mission of powering open financial infrastructure across the blockchain space. The Open Network, which is what Ton stands for, is a decentralized layer one initiated by Telegram by operating independently since the company abandoned development due to regulatory concerns. The ecosystem has seen rapid growth lately, with incentives for onboarding Telegram users, boosting to a number of monthly active addresses to 1.7 million from the less than 100,000 6 months ago, according to the blockchain data by Tunstat. Telegram also recently switched to the network's native token, Toncoin, from euros as a payment for its advertising platform or structure. The Ton token was up by X amount. We saw how much it went up to $7.38. It has since diminished to $5 and something. Crypto transactions should be simple as texting. Ramp CEO says, we look forward to seeing how enabling access to instant, low-cost crypto transactions can improve the lives of hundreds of millions of users in the Ton ecosystem. Actually, I think I transacted on Ton. It wasn't as cheap as people keep making it out to be. Like, not as cheap as Litecoin and Solana and stuff like that. But we'll see. Speaking of Solana sees dramatic increase in institutional portfolios. However, it has seen a diminish in the hype in the overall ecosystem. Right now, we're down to $137. You can see if we look back at the monthly, back over here where we broke that $200 mark, it has diminished, right? Will we come back up to that $200 mark? I certainly think so. But, a lot of the hype because of Bonk and various tokens on Solana have diminished. However, I'm still building the tokens, and Project 1 is almost done. I'll keep you guys up to date on the DemoCats token and then Project 2 will come out, and I will give you guys all that information as it works. Matter of fact, I'm not sure if anybody's interested, but if you need help creating a token, like right now I'm working on behalf of, I'm working with our colleagues like Pellish, Arc, and a couple others for Overboard on a project that was brainstormed then. So Project 2 is, I'm still working on it, but it's like kind of chilling for a minute. I got to get some other things done first. So that project, Caffeine Crypto, is also been talked about on Pellish Miner's channel. So that's another Solana token. And I worked with them to help them out. I do have a guide, but if there's a way, instead of you using, and I'm going to do a whole video on this, if there's a way that I can help you create a Solana token, in which, like, kind of think of it as a consultation. And you can do it for free. You can do it for very cheap if you just go and research. That's the whole point of a video I'm going to talk about in the future or release later. But there's all these easy to use, quick start apps, but you're going to be spending hundreds, anywhere from $70 to hundreds of dollars to do it, when you can just learn to code yourself, type in a few commands, and spend $2 to $3. So the money that you would save, if you need help, and you do want help, what I'm saying is, hit me up, we'll schedule time, like throw me a little something to help pay bills, bro. Like, I consult you, I give you all the information, I guide you, get you started up, provide information, and then you do with it whatever you want. Doesn't matter, right? But instead of paying hundreds of dollars through these quick start apps, you learn to code yourself, so now you're educated. So you're getting value in education and knowledge, but you're throwing me a little something because I provided you that information or sat down with you or helped you out. We jump on Discord, we jump on Zoom, you share your screen, we jump on Ubuntu or Windows, command prompt, PowerShell, install some scripts, whatever, right? I like working in Ubuntu, but as long as you can install the Solana CLI and all that stuff and Rust and dependencies on a Windows system, you can do it. But I figured, while I will probably do a video on the step-by-step, because it does need to be updated, because some of the videos out there are definitely outdated, and you'll get to a certain point and get stuck because those videos are outdated. But if there's a way that I can help you save money, teach you, and then I can make a little something, I think that would be beneficial. Because I never try to make money off of education. But I need to, man. Like, I need to. Like, I always do this. Like, I go to a job, whatever it might be, and I sell myself short, right? Because I want to retain the customer. The first job is a little bit cheaper than normal, or the charge is a little bit cheaper than normal, because I always want to retain the customer. The problem is I do it cheap and then they don't call me. So then I didn't retain the customer, and they just got away with wrecking me because I did the job so much cheaper than the competitor. So, like, if there's a way and you have the funds to do it, like, it depends on you, your situation. You know, like, if you're a family of 5 and you're barely making ends meet, then yeah, like, I might do it for free. But if there's a way that I can help you and you have the funds, rather than spending hundreds of dollars creating a token, hit me up, let's schedule something, and I'll help you create a token. What you do with that token and what it turns into is going to be up to you. But at least get you started, at least get you set. Sounds like somebody's out front. Speaking of which, I didn't talk about this, but inside my description there is, and I know I'm like self-promoting and plugging, and I don't like doing that, but it definitely should be, like, I need to get my own. Like, I'm helping everybody else and I need to get my own. So with that said, another plug, Son of a Tech, right? So Son of a Tech has courses. If you're interested in and learning from Son of a Tech, you know, Son of a Tech's got a unique personality, right? Some people, I understand, his personality rubs them the wrong way. Some people love it. Some people like, you know, his rough but straightforward opinion and thoughts. Some people don't. It doesn't matter. What's key here is the knowledge. Like, he's smart, okay? He's smart. He's also, I believe he's a system administrator just like me. I think he might be more on the Unix side, but we're both in IT. I might be a little bit more in SecOps, security operations, but very smart. His opinions sometimes get him in trouble or get him unwanted attention. But if you focus on the education Son of a Tech has, and Son of a Tech, I mean no disrespect by the words I'm saying. The point is that he's very knowledgeable. He's pretty smart. And if you're interested in joining their class, you can claim a spot. Now, yes, he's charging for these classes. But Son of a Tech, whether it's on locals or whatever, there's an opportunity there for you to learn about tokens before anybody else does, to know about various aspects that other people won't find out till later, so on and so forth. So if you're interested in signing up for their course, it is linked down in the description. Check it out, man. I'm probably gonna drop this link in a number of my videos in the future. It will be in the description, but I just want to, there's plenty of space for all of us to grow in this. BBT has made that crystal clear to me. Is there space in crypto for all of us to go and make our own niche? There is. There is plenty of space. Unfortunately, some of the other people are so greedy that they kick people out of that space and they start to get competitive. We've seen that. For example, I'm not going to name names, but we've seen that a number of times, right, throughout the crypto space, primarily in the crypto influencer, not the mining space. But the mining space is a crypto space. And there's plenty of room for all of us to grow and to have our own niche. Start your own forum. Start your own channel. Start your own mining farm. Start your own consultation. Do it. Hit me up. Let's get it going. Do not be shy. Go for it. And most of you already have, and I'm glad to see that. Some of you even hit me up and said, "Thank you, Vega, for telling me to start. I did it. I'm doing good now. I'm happy for you. I'm stoked for your growth. Keep it up. Do your thing, baby." Anyway, Solana sees dramatic increase in institutional portfolio. So while the hype in Solana with all the bonk and Mew and all that stuff has diminished, institutional investors appear to be broadening their exposure to altcoins, including Solana, which has seen a dramatic increase in allocations from wealth managers and hedge funds, says Coin Shares. Investors are more optimistic for Solana. The asset manager head of research, James Butterfield, wrote an April 24th report based on a survey of 64 investors with a combined $600 billion in assets under management. Nearly 50% of surveyed investors said that they had invested in Sol, a significant bump from CoinShares' January survey, which showed a number of respondents had any investment in an altcoin, right? It was primarily just Bitcoin. Now we're seeing Solana, Ethereum, a good mix between Bitcoin, Solana, and Ethereum, so on and so forth. It kind of feels like the Solana is the new Ethereum. It hasn't flipped Ethereum. It's nowhere near. It can't even pass Binance or BNB, but when it was at its height, I think it did. I think it did flip, right? So we'll have to see, how things shake up. But yeah, institutional investors are very hyped up about Solana. The survey also found that a percentage of cryptocurrency in investors' portfolios rose 3% compared to 1.3% in January, which Butterfield said that it was the highest weighting since the survey began in 2021. Unsurprisingly, if you're trying to get my attention, make sure you at me or send a super chat. The survey also found a percentage of cryptocurrency in investor portfolios rose 3% and compared to 1.3% in January, which Butterfield said was the highest weighing since blah, blah, blah. I don't know why I said that again. Unsurprisingly, some of the largest contributors to this were allocation from institutional investors who finally had the ability to gain exposure to Bitcoin via the US ETFs. And you can see the chart here. Exposure to the distributed ledger technology was the main reason investors bought digital assets. And despite most cryptocurrencies rising in price since January, the percentage that said they are good value jumped from 15% to over 20%. Client demand has risen too, as it often is the case during a positive price momentum. Although, there's still significant barriers to entry. Although this may be due to corporate restrictions and the way in which regulatory guidelines are interpreted, there's still some continuing indicators or encouragement for Solana to continue to receive that institutional investment. We'll see how Ethereum and Solana work out as we move into this next leg up on the bull market. I still believe we're in a bull market. There's always chop sideways, capitulation, a downturn, mini down spikes as we are still in a bull market. But we're just at the, I feel like we're at the beginning of said bull market. Maybe like the first 1/8 of the bull market. Solana price prediction as Sol shows strong recovering signs. Is it time to load up? I'm not gonna. That's an opinion piece. I'm not gonna talk about opinions. But we can see that whales are loading up, and they're also converting or transferring, from offshore or offline wallets to cold storage wallets. A lot of meme coins are out there. Slafana. You know what's actually one that I got my eye on? It's not so much I'm eyeing it because of the coin. I'm eyeing it because it's 4chan on Solana. So it's called SolChan, right? And you can just drop your NFTs and your images and all kinds of stuff on there. It's pretty cool. But yeah, something to keep an eye on. Bitcoin mining pool via BTC. Red Panda talked about this. Sells epic first post having sat for 2.13 million. So they made a lot of money. Not only did they hit a block with over 33 plus Bitcoin in it, but they made money off of selling the post having sat for 2.3 million. That's crazy, right? The ordinals protocol allowed individual Satoshi to be identified and traded, attached value to a particular notable sat for the first time via BTC. The mining pool that mined the first block after Bitcoin halving on April 20th sold the epic Satoshi it contained for 33.3 BTC or 2.13 million. An auction for the Satoshi or sat, which has face value of around 0.006, ended at whatever that is, 1600 UTC. I'm not sure what that is local time. Following a flurry of competing builds during the final few hours, there was an expectation that the first sat produced by the Bitcoin network after its forced halving event on April 20th would attract considerable interest because it hasn't done this in the past. The first block mined after each halving in the past did not get considerable interest like this. This is a whole different ball game, whole different world. A lot of eyes are on it, so on and so forth. So yeah, via BTC was able to make huge amounts of money off of that. However, Red Panda called this out on Twitter saying, have they paid out? Has via BTC paid out? Because it looked to us during the live streaming on the day of the halving that this block was won by a solo miner. But they go on to say here that on April 20th, the BTC block, 840,000 was mined by via BTC, containing multiple transactions with significant transaction fees, a total of 37.625 Bitcoin. The unusual situation triggered via BTC risk alerts, and the rewards for the block have been temporarily frozen. We are currently investigating the situation. Please pay attention to subsequent announcements for the results. We kindly ask for your patience while waiting for the distribution of effective rewards. Thank you for your support and trust in via BTC. So wait, you made 2.13 whatever million off of selling a sat, but where's the rewards? Did these people get paid? I don't know. I have no idea if these people got paid. Like, there's the auction. Auction was wrapped up. Congratulations to the winner. Like, completely crazy. Heartfelt thank you. Yeah, you made lots of money, dude. Where is the token? Did it get paid out? Did people get paid out? Or did you... Was mined on, blah, blah, blah. Bitcoin price at the time, da, 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 da. Yeah, but what's the update? Did these people get paid out? I honestly don't know. That sucks. They should get paid out. That's a lot of Bitcoin. Maybe it wasn't a solo block, but if it was, congratulations to whoever won it. I hope you get your money. Next, Bitcoin mining difficulty rises for the first time immediately after the halving, and runes fee frenzy, right? Everybody was concerned about runes. A lot of people don't like runes for some reason. I'm not going to weigh my opinion. It's irrelevant. You like it, you don't like it, that's on you. But, ordinals, runes, various things that draw attention to Bitcoin is in my eyes, a positive. But the Bitcoin mining difficulty is rose 2%. Matter of fact, we hit a new all-time high. I announced this on the channel or on Twitter. And you can see here, we hit a new all-time high, right? This one's higher than the previous March all-time high. Let's zoom in on that. Right here. You see it? Boom. 719. Whereas the March high was 716. But after the halving, the Bitcoin network hash rate continues to grow. Why is it growing? Why would it grow? Well, big mining operations plan to double. If we look at some of the news out there, Marathon and a number of Riot and a number of others are expanding or doubling their size. They're not going to go ahead and close up shop. Now, I have yet, and I'm interested to know if you guys know anybody, is there any small or mid-scale operations that are closing shop or shutting down or just turning off right now? If there is, ping me. I want to know if there are. Because I have a feeling that the current profitability will cause some of these smaller operations who didn't prepare themselves adequately, considering their electric rate, their overhead, the cost to operate, and they have to shut down or close shop or just temporarily pause or run during a certain time of day when the electric rate's a lot lower, so on and so forth. So yeah, Bitcoin mining difficulty continues to rise as hash rate continues to rise, as people keep on trying to stack as much Bitcoin as possible. And you can see a chart here where we can see, I believe, what is this? So price is in green, difficulty continuing to step up. Let me move out of the way real quick. That's why you can't see it. So difficulty continuing to step up as price continues to, you can see it's kind of curling and chilling sideways. We need the price to take another leg up. We definitely need the price to take another leg up. But we'll see how things go. But right now, like, I'm making 0.00008 less than what I was before. And the people that were overpaying to mine Bitcoin prior to the halving have settled down and moved on. So we're not making as much as we used to. NiceHash was making a pretty penny because people were overpaying. But now that those people are gone, it's probably just better to direct mine with what small little allocation I have. And I will bring you guys an updated video because I have a bunch of data from post or pre-halving and post-halving my rewards to S19K Pro. Stay tuned for that. That will come to the channel. Probably not next week, probably the following. I got a lot of stuff coming out and I am weeks behind because I am working on these Solana projects to try to bring you guys some fun and games. So either way, are you mining Bitcoin? Are you oops, sorry. I didn't know it was gonna autoplay. Let me let me turn off the desktop audio real quick. Damn it, stop doing that. So yeah. Stay tuned for updates from the channel from the various community members. Crypto World's gonna talk about investment strategies, Bitcoin drops, price, consensus sues SEC, which by the way, that's pretty interesting, right? So we have companies that are trying to fight the SEC. Also, the beginner's block did do a meet the miner on Sterling Spectre, one of the community members out there in the crypto space, one of the newer cats, but still one that is knowledgeable. If you haven't checked it out, go and check it out. The technicals has been around for quite some time. They had a hiatus. They're back again on the beginner's block. Go and check them out. Meet the miner. If you haven't followed the technicals, one of the OGs in the space, but did take a hiatus and is back again. I did one a while ago. A number of my colleagues did one a while ago, but check out the one with Sterling Spectre and the technicals. If you haven't done so, the beginner's block is linked down in the description. Now looking at hashrate.no, ASICs, right? Obviously the KS5s and the Owlbox and all that stuff. And look how much the price of, look at the profitability of this thing. Remember when this AL box or this gold shell AL box first came out? MSRP of 15,000 in some places, 6,500 in others. Was making about $100 a day. Now it's down to 46. Ain't that some but still 180 watts, that ain't too bad. 20 alpha day, that's not too bad. So besides that though, it's still a bunch of Caspa. The problem I see though is that Caspa and maybe we'll talk about this in a future video. I'll have some colleagues on. What's Caspa doing, guys? What are they doing? What are they doing? Nothing. Like, the team is doing great things. Hang on, let me time out. All right, I said that wrong. The team and the project and the devs are doing great things. The price is not doing anything. And the price is stagnant because you just got so many fucking ASICs out there fucking hashing and getting the token and then selling because they got to cover their prices and their overhead and their electric. So we're stagnant. We're stuck. We're stuck under 13 cents. We need it to go to 18, 20, 25. We need it to go. You know, it's going to take significant, you know, it's going to take a major bull run, Bitcoin getting to 120,000 plus for Caspa to get out of this rut. But because of the ASICs, it's pushing it down. And now guess what? Now guess what? Who's it happening to now? Alphium. Go figure. Go figure. I'm glad I honestly took profits at $3.30 I'm glad. Right? I think the all-time high was $3.40, almost 50 cents. I'm glad I took profits at $3.30. Not, I didn't sell all my position, but I sold a percentage in order to help pay for, because I got to go to these events, right? Like, I want to grow in the crypto space. Requires me to travel and go to these events. I can't go to every single one. I'm not a degen, but it requires money, so I had to sell and take some profits. And of course, the moment I sold my first position, the price went up even further. But then obviously, like, it's down now. So ASICs, man, ASICs. So what is a product to do? I talked about this in my Caspa's in Trouble video. If the project is going to have ASICs, and Radiant even announced that they'd be happy to have ASICs on the network. So GPU miners are going to get pushed out once again. We have to look for new tokens to go to. And this is the game we play, right? Back in the day, Pirate Bay, Napster, whatever, trying to get you music, trying to get your videos unlawfully, pirating, whatever. You're getting your stuff. Gets shut down, what do? You hop to the next one. Gets shut down, what do? You hop to the next one. Crypto mining is the same thing. Spec mining is the same thing. You get on a project early, you get a bag, you sell when the market first releases or launches or lists. You get your bag, get your profits, whatever. You maybe stack it up if it continues to look good. If it diminishes and just slides down and goes to nothing, then you let it go. What's up, Rud Puts? Thank you for being a member for 14 months. You have a great weekend as well. So, you know, it slides down, you move on to the next, right? Then the next spec project. You mine it, get in early, sell the bag, make profits, next one. And so this is this hopscotch game that we're going to have to continue to do, especially now because GPU mining profitability is meh, right? Like at 15 cents per kilowatt hour where I live, I'm negative on most of these things. So if you have 10 cents or less, congrats. But the EU's got it worse than me. People in other countries got it worse than me. So I don't know. But it just sucks because there's only two options, which is why I want to talk to the Alphium team. They either, because they're not on a lot of markets, right? Yeah, they got the Ethereum Uniswap market, yeah. But the problem is they need to expand further. They need to get on more markets. They need to continue to build. They need to continue to market and to generate and all that stuff. Because now that ASICs are on the network, we're going to see price being held down as these large-scale miners, mid-scale miners, continue to push the price down or keep the price where it is because they have to sell what they're mining. They have to pay for their stuff. They have to. So just like we saw on Caspa, where it seems like we can't get above 13 cents, no matter what we do, you know, and when we do, it's short-lived. Now we might see Alphium get stuck at $2.20, $2.30, $2.50. So the team needs to push, and they need to push now and fast and hard before more of these ASICs come out, because there are more out there. And if they're not ASICs, they're big boy FPGAs like the Superscalar K30 or the Coal Engine P2, which I reviewed on my channel if you haven't checked that out. But the top tokens right now are Caspa and Alphium. Where's Bitcoin? Where's Bitcoin? Where's Bitcoin? Huh? Where's Bitcoin? Where's it at? Oh, it's all the way down here with the Antminer S21 Pro. $10 a day. At my electric, negative $2 a day. Otherwise, I'm doing DigiShaw, right? Gigabyte Shaw. $13.76 a day. $1 a profit a day. Like, hopefully we have more efficient Bitcoin ASICs coming out in the future. But if you only have a bunch of S19K Pros, your best bet is to get more S19K Pros to offset, if you have good electricity, that is, to offset the amount you lost and try to stack as much sats as possible. Pellish Miner, grab yourself some Solana with this. Still helping you out and keeping the community moving forward. Demo Cats of Crypto, appreciate you. Thank you all for your help. No, I appreciate you. You didn't have to do that, man. It's all good. I appreciate it. But if you send me $20 on YouTube, Pellish, YouTube takes a pretty big cut of that. So you're really only giving me like whatever. Don't. Super chats are cool if you're trying to get my attention, but be careful because I'm not getting much of that money. YouTube is, and YouTube continues to suppress my channel even though they say they don't. Get my tinfoil hats conspiracy. Anyways, so yeah. ASIC miner value. Mine the ASIC for some reason is having a weird one. If you go to mine the ASIC and the website pops up, your Google browser's out of date. Do not click it. I'm not sure if they were compromised or what, but be careful. But I went to mine the ASIC and that's what showed up. So Casper miners are killing it. AL box is out. You know, even the Jazz miner X16-P is doing pretty good. I like the Q. But yeah, some of the Bitcoin miners are meh. So Bitcoin mining profitability is down. We'll do a full video with the data breaking down before and after the halving. GPU mining profitability. Let's go look at it real quick as we get ready to wrap up. If there are any last minute questions, concerns, comments, please hit me up. Let's say we got a rig of 3080s at 15 cents per kilowatt hour. Connect. I am including dual mining. So Graham, but again, Graham, it says it on the website, guys. It says it on the freaking website. Okay? 50%. Commission is 50%. Okay? 50%. Just keep that in mind. You're not making what hash rate know it says because it's not calculating the full thing. Conceal all of a sudden popping off. I'm not sure why it's at the top here. I do have it sorted by profit. But yeah, Conceal up there, Eternity, Carlson, Pyren, Nautilus, Nexel AI, Hootsat. A lot of the Carlson hash, Pyren hash type tokens up towards the top. I did like Ironfish and Graham, but I stopped doing that a while ago because obviously I just wanted to do it for the video. Ironfish Pyren is one of my favorites as well, or Hootsat. And because Pyren hash is on, let's see here, on mineable. Also, if you do, I'm helping Pellish collect addresses. Stay tuned. Don't just DM them to me, but stay tuned for Cats of Crypto. We'll get everything together. Still work in progress. We'll get the list of addresses. Note that it's not free to just send you guys these tokens because we have to create an account for each of your wallets. Every token you own has to have an account for that address or for that token, right? So it's not just your token address. There's an associated account. That costs a significant amount. And when I mean by significant amount, instead of the normal fee of 0.00005 Solana for you to send transactions back and forth, it's actually 0.00203 something, and all in all it's 0.00204 to just airdrop you some token. But it's a lot cheaper than those apps, those easy convenient apps. So just stay tuned, hang tight. We'll ask for your addresses. I did do a form where you can fill it out and put in your address, so we have it in a Excel sheet. You don't need to dox yourself or anything like that, but just stay tuned. Follow us on Twitter, DemoCats24 or Cats of Crypto 9 on Twitter. I already did the Demo Cats. You can't get into that one. I already airdropped that. That's done. I just need to create the liquidity pool. But the Cats of Crypto, we'll have to get a list of everybody together. So just hang tight, and we will keep you posted. Here it is. Boom. Okay. So we'll keep you guys posted. I'm gonna drop both links. Make sure you follow us on there. Let's go find Demo Cats. There it is. Demo Cats 24. Oops. And the second coin is one that you can join. Right. The second cats I'm not gonna talk about. I'm just gonna circle it. The second coin I'm coming out with, you guys will be able to join the airdrop. That's the form I built. That's just not ready yet. But the Cats of Crypto, we're still working out some stuff, so just hang tight. But anyways, Pyron Hash is on here. So you can dual mine Pyron Hash and Iron and get paid out in whatever currency you want, like Radiant or something like that. Because Radiant had a halving, and so my FPGA is making a lot less than it used to. Yada, 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 blah, blah, blah. So on and so forth. So anyways, Son of a Tech, sign up for their classes. If you're interested and got the funds to do so, get some knowledge and not inside information, but knowledge that is not often left or provided to the general public. A lot of good info on the locals, their normal channel, so on and so forth. Check out Meet the Miner or Sterling Spectre and the technicals on the beginner's block, linked in the description as well. At least the main website is. You'll see it posted. And just keep stacking them sats, man. Keep stacking them sats. Hang tight. Stay tough. We're going to watch this video together while I answer any questions, comments, or otherwise. But I don't know if I'm going to be able to go all the way to 1 o'clock as we wait for rapid mining. But, yeah. Oh, shit. Crypto Wendy's live. Maybe I might send you guys over there. Yeah, we might do that. She's very unique, but very knowledgeable. So let's watch this video, and then we'll send you guys over to Crypto Wendy. Maybe if I can even redirect. We'll see. If you got any questions, hit me up right now.
And continues to stall at the $63,000 level. Crypto firm Consensus sues the SEC over Ethereum regulation. And investment strategist Lynn Alden weighs in on how cryptocurrencies stack up against Wall Street's performance as macroeconomic pressures weigh on investors.
I completely agree, by the way, Jay Rose. It's all about power efficiency after the halving, right? So everybody's trying to maximize, which I decreased my my ASICs, right? So I decreased them down to because not only is it getting hotter here in Florida, but to improve its efficiency. I could get it a little bit lower, but I'm stepping it down bit by bit, playing around with the numbers, using my Google Sheets to try to see where I want to sit. This is not the most efficient I can get this thing to, but I'm just playing around with different numbers to see where the perpetual tune on the Epic control board likes to sit. So just FYI.
Investors' minds. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrencies under pressure as we head toward the weekend. By noon Eastern, Bitcoin was down by a little less than 1% at the $63,000 level, while Ether edged lower by 1.3% to trade at about $3,100. Solana fell 3.5% to $142. Acts as a broker and offended to DTCC has wavered on Ethereum's classification as a security. The lawsuit revealed that Consensus received.
I'm not sure if you heard that because I kind of got it at the tail end. The SEC to classify Ethereum as a security would be a very bad thing. Just letting you know.
The suit also claims the SEC has wavered on Ethereum's classification as a security. The lawsuit revealed that Consensus received a Wells notice from the SEC earlier this month. In that notice, the agency said it intended to bring enforcement action against Consensus for allegedly violating federal securities laws through its MetaMask swaps and MetaMask staking products. By offering its MetaMask wallet software, according to the filing, the SEC believes Consensus acts as a broker and offers and sells securities, even though the software doesn't hold customer assets or carry out transactions. In a blog post yesterday, Joseph Lubin, the CEO of Consensus and an Ethereum co-founder, called the lawsuit an important step towards preserving access to the Ethereum blockchain. The agency declined to comment on the lawsuit. Next, Stripe is bringing.
So just keep that in mind. So Consensus is saying we don't use or have or contain user funds. All the user is doing is storing their assets securely where they own the private keys, whether it's a hardware wallet or not, and they're able to interact with various ecosystems at their leisure and discretion. We don't hold any funds. The user does. So how are we selling securities? How are we a broker? Now the swaps too are also done through third-party integration. So you can't really go after Consensus or MetaMask for that. You have to go after the Uniswaps, which they did, or the Sushi swaps, or the various DEXs, right? And I will say this. I'm going to say this right now. The SEC and the government can shut down this DEX and that DeFi app and this DEX and that DeFi app, but there's just going to be another one that pops up, another one that gets created, a new owner, a new place to go to swap your funds and whatever, right? Another like tornado cash type situation that was being used to money launder was just shut down and the people arrested and stuff like that. There's just going to be another one, and then another one, and then another one, right? Same thing back in the day. Pirate Bay server gets shut down. 12 hours later, it's back up somewhere else.
About crypto payments by allowing users to accept stablecoins for online transactions. In a post on X yesterday, the co-founder of Stripe, John Collison, announced that the company will start supporting global stablecoin payments this summer. He said transactions instantly settle on-chain and automatically convert to dollars. The company said it's starting with USDC stablecoins and that payments will be available on the Solana, Ethereum, and Polygon blockchains. In a keynote address at Stripe's Global Internet Economy Conference, Collison said crypto is finding real utility and that with transaction speeds increasing and costs dropping, crypto is, quote, finally making sense as a means of exchange. This announcement comes 6 years after the payments firm dropped support for Bitcoin, citing the token's notoriety for volatile price swings and a lack of efficiency in making everyday transactions. And finally, the European Parliament has adopted new rules targeting money laundering. The laws include provisions that allow direct and free access to national registries of financial information. Institutions like crypto asset managers would be required to conduct enhanced due diligence and report suspicious activities to financial intelligence units in the region. On top of that, a new agency called the Authority for Anti-Money Laundering and Countering the Financing of Terrorism would be established. Although the law was adopted by Parliament, the EU Council still needs to formally adopt the rules before they're published in the EU's official journal. All right, going back to markets for our main story. I spoke with Lynn Alden, founder of Lynn Alden Investment Strategy and board director of Swan Bitcoin, for insight on Bitcoin's performance in the face of macroeconomic pressures. Plus, she weighs in on what could drive the cryptocurrency's next rally. Let's dive right into it. Bitcoin has been trading in a narrow range all month. What do you make of that, and what do you think could drive it higher again, either above 70K, which is kind of the ceiling it's been, which has been its ceiling for the last month or so, or even further to its recent highs from March?
So I think it's natural that after an asset goes up very quickly in price, that it has to kind of cool off or consolidate for a period of time. So I think that's totally normal. In general, I think that Bitcoin is likely going to follow measures of global liquidity. And so whenever the dollar index is pretty strong or money supply growth slows down, these kind of anti-liquidity actions, that generally puts a pretty good amount of headwinds against Bitcoin. And that's what we've been seeing over this past month. The market is pricing out some of the rate cuts they've seen because of increasing inflation expectation. There's been a bit of a flight to safety because of geopolitical issues. And so all of that kind of pressures assets that are very tied to liquidity, including Bitcoin. It's not the only variable, but it's a big variable. So I would expect probably chopping around in a range for a while longer. But when you look out 12 months or more, I expect probably to see higher liquidity and to Bitcoin have followed up during that time frame.
And then pulling it back to what's happening in the short term, we had a big market day yesterday, U.S. economic data showing a sharp slowdown in growth and pointed to persistent inflation. So there were big declines in all of the major stock indexes, but Bitcoin was pretty resilient. So what did you make of Bitcoin's performance given the stock market day we had yesterday?
So I try to be careful reading into any 1 day periods, but in general, one thing I would point out is that U.S. stocks, there's really a couple major components that make them behave a certain way in a period of time. One is the expectation of their forward performance, which is heavily tied to economic performance, and then the other one is the valuation component. So basically, what is the discount rate that you're comparing them to? If yields are going higher in a vacuum, that can put pressure on some of the equity valuations. And so
So I'm going to talk about something that somebody just dropped in the chat. Let me just move this over here. So AVAL is a data availability L2, right? Okay. So I haven't seen or much about this project, but let's just go through it while we're at the tail end of the stream. So the unification layer for Web3, the data layer, data availability of Web3 is important, right? There's a lot of projects out there trying to unify or connect various Web3 ecosystems together. Eval is a Web3 infrastructure layer that allows modular execution layers to scale and interoperate in a trust minimized way. Let's see here. There's Eval DA, or data availability, born from the need of blockchain solutions that scale with modern demand. Like Ethereum's updates was an improvement on data availability. But the Avail DA serves as a powerful base layer for the next generation trust minimized applications. Then there's the Nexus to address rollup fragmentation, right? ZK rollup, stuff like that. We're building Nexus, which is permissionless verification hub that will unify rollups and chains, leveraging Avail DA as the root of trust. Then Fusion, a unified layer using unified economic security. Avail Fusion security will enable fair and additive crypto economic security. It looks like they were backed by a number of VCs, some of them that are notable. And, you know, they have testnet guides. They're on Discord, so on and so forth. So first off, good website, right? Let's go check out their Twitter, right? So this is some of the things I look for. Good website. They have a lot of followers. Are they active on here? So April 18th, 23 hours ago, 23 hours ago, 23 hours ago. So they're active on social media. Now, just because you see a lot of followers doesn't mean it's a good project. Right, it could have just bought a bunch of followers. It's got a Telegram. There was an airdrop. So there was an airdrop that where 354,000 wallet addresses are eligible to claim these 600 million tokens in their unification drop. But be careful, because there's fake airdrop websites out there. But basically, it looks like here in a blog post from Avail team, these wallets are eligible to claim 6 million of their tokens. In the unification drops, recipients are widespread, but the team said that they must be either blockchain ecosystem developers, testnet contributors, users of rollups, which is, you know, Polygon, ZK Sync, Starknet, Optimism, Arbitrum, Polygon proof of stake, stakers, or Avail community members that have made significant ecosystem contributions. Recipients are able to verify token claims up to May 4th, right? And then here is their blog post talking about it. But again, you have to be a a contributor, a dev, or developer on one of these chains, or a developer for the overall Avail system. And then here's the website where you can claim your rewards, so on and so forth, and check your availability, right? claim.availproject.org. # claim section. However, be careful out there. To the viewer that requested, do I know anything about it? No, I do not know anything about it. But with a quick look, there's some positive indicators, right? The website, the ecosystem, what it's trying to do, the drive is trying to initiate, the answers is trying to propose, or the answer to questions is trying to propose. Data availability is big. Unification of Web3 is big. You know, this is pretty cool. It talks about how it works and how to become a validator. So really good document section, right? docs.availproject.org. So I've seen this same type of setup for the Solana ecosystem, right? Where you can learn how to develop on Solana, so on and so forth. So while I don't know much about this project, it ticks a lot of the right boxes. However, I'm not going to say we should all be getting into it. This is something that I'm sure one of my Web3 peers will be able to speak to in more detail than myself. But it does look pretty good. Maybe I'll play around in testnet or testnet environment just to see what's going on. But the DA mainnet is coming soon. So it's not launched yet, and we'll have to see how things go in the future. But that does look pretty, looks pretty good. Looks pretty good. We'll see as more and more of these projects or entities trying to solve the data availability, the Web3 infrastructure, unification, and scaling questions. We'll see more of these products like this pop up here in the future. So we'll have to see what's going on. But that's going to do it for today's stream. I'm going to move this back over here. Thank you so much for hanging out with us. Let's see here. Is Crypto Wendy-O still alive? I might send you guys over there. Rabid Mining should be going live here in about half an hour. So hang tight. Maybe, nope. I think Wendy is done. Let's see here. Crypto Wendy-O. Because I got to get something to eat. I got to go take care of some stuff. So you got Tom Crown at 1. If you're into TA and technical analysis, stuff like that. Looks like Wendy got done streaming. And then you got Rabid Mining, which I'm going to put you guys to, but you're going to have to hang out for half an hour before he goes live, which I'm sure you do not mind. Let's see here. Rabid Mining. Rabid. That's weird. Why does Rabid Mining not come up? Rabid Mining. Yeah, I don't know. For some reason, his stream doesn't come up. Very strange. Any last minute questions, comments, concerns? Otherwise, before I get out of here, because I need to go. Yeah, this is it. So why is it not coming up?
Oh, nice.
Why is it coming
Hey,
up?
guys, come here. Check this out. I'm getting some.
There it is. All right, good to go. All right, so let's see here what you guys got going on. You guys are saying cheers, awesome stream. Thank you. You're very welcome, Pellish. And Ariel, hopefully that it looks pretty good. It looks pretty good. But I don't know much about the project. It just ticks the right boxes from a quick glance, and a deeper dive will probably be done by one of my colleagues in the Web3, not the crypto mining community, right? Not my colleagues like Seb or Hobbyist or Red or whatever, and Red Panda, Red Fox. When I say red, there's so many reds. But you know, the Crypto Wendios, the Tom Crowns, the K Dubs, the Altcoin Daily. Maybe they might have something to say. It's in testnet, not mainnet yet, but it does look pretty interesting and a little bit promising. So go ahead on over to Rabid Mining. Go get yourself something to eat. Keep stacking them sats. Take care of one another. Much love, much respect. Stay tuned for updates from Demo Cats liquidity pool coming soon. I'll announce that when it's live, where you can buy and sell Demo Cats right there on Radium and various outlets, and Cats of Crypto in honor of Overboard Tech and Eric and everything he did for the community. I will catch you guys on the next one. Take care.
Are you looking for the latest in crypto news? Or maybe you're looking for tips on trading or mining? Well, look no further. The Beginner's Block offers a wide articles and blogs that will help you know what's going on in crypto and will help you with what you need.